Hello, I'm Bernard Hickey from interest.co.nz with a special report on the safety of our big banks. It's been quite interesting today in the discussion about Kiwi Bank and whether or not the national government should or will sell it off. Some people are saying, well, it's good to have a New Zealand-owned bank with a government guarantee because perhaps we can't trust the big Australian banks who dominate the market here. I certainly don't believe that's the case. Our big banks, which include ASB, ANZ, BNZ, Westpac and National Bank, are safe. They have at least twice the amount of capital required by the Reserve Bank to make them safe. They are extremely well diversified across their funding and their lending. So they lend across big business, small business, farming, consumers, households. They also get their funding from so many different sources. Households again, mums and dads who put their money into term deposits, from businesses and from overseas, both their own bank shareholders, other banks and direct investors. And then there's the final protection for these big banks. They are owned by $1 trillion worth of pension funds in Australia. It's also worth noting that they are regulated by the Reserve Bank, and that means something. The Reserve Bank crawls all over these banks day in, day out to make sure they're safe. And just recently, the Reserve Bank made sure they put aside just a little bit of extra capital to deal with a potential 30% fall in house prices. Some people have asked, well, maybe that's not safe enough. Maybe we need a bank deposit insurance scheme. I actually agree that we do need a bank deposit insurance scheme, and I've argued for that before on this site and on other sites. There's some good reasons for this. We need to make sure that the risks of any bank failing are made explicit and that people assess that when they decide to go into a bank. It also protects a banking system against a run on funds, because right now there's no overt or obvious protection for bank deposits. In theory, a bank could collapse, and although the bank depositors are first in line to get their money back, there is no government guarantee on bank deposits in New Zealand. Of course, that's in theory. In practice, most people believe that the government, either our government or the Australian government, our Reserve Bank or even the Australian Reserve Bank, would step in to stop one of these banks failing completely. Now, shareholders might lose their money, but deposit takers, I doubt, would lose their money because they're simply too big to fail, these banks. ANZ National, for example, has more than a third of the market. So, our banks, particularly our big banks, are safe. It's extremely unlikely that anyone would lose their money in one of these banks for lots of good reasons. Our banking regulators, our governments would stop that from happening. But we still need a deposit insurance scheme, as much because I think it should be applied to other deposit takers as well, be they finance companies, building societies, credit unions, and other cooperatives, including the PSIS, so that we're all clear that at least some of our money, perhaps up to $100,000, is protected by a deposit insurance scheme in the event of a failure. After all, New Zealand is the only developed country in the world that doesn't have a deposit insurance scheme for its banking system. And as we saw in America, where we're up to $100,000 insured, that can be a big help in stopping runs on banks. And Australia too is getting their own deposit insurance scheme. I hope this starts a debate, and I hope that New Zealand investors have a really close look at their banks and realise that they are safe. I'm Bernard Hickey, and that was a report on the safety of our big banks for interest.co.nz.